Hello and welcome to Almus Market Mornings, your daily dose of global financial update with me, Shikhar. And I'd like to begin by saying TGIF as a dull action week for USD INR is about to end. And though we saw some glimpses of this range being broken yesterday, as USD INR made a new all-time high, it still is back in the same range. While we also saw dollar index having some action on the higher side, euro slid, and rest of the currencies as well had their share. So Pankaj, I'd like to have some comments from you here today. What are we expecting out of the markets as we see a lot of action in the other currencies but not in dollar rupee?
Hey, thanks, Shikhar. Good morning, everyone. The action on dollar rupee is much dependent on RBI conviction that how long they would be able to hold, or our central bank conviction to how long they would be able to hold dollar rupee in this range between 77.50 and 77.90. And in few days, it had basically narrowed down to again 77.65 to 77.85. But I think it will take some time. Global developments are very interesting one. The entire market, global market, was expecting Lagarde to be hawkish and see words. Even then, markets sold off euro. So we'll cover all these. It has been a very sharp day of a risk-off sentiment in global market and an impressive rally in dollar. Rate hikes across economies has increased chances of a recession coupled with higher inflation, putting both stocks and bonds on the top. Let me put you that in last couple of months, 50 central bankers have increased rates by 50 basis points. That's an interesting one. And now US 10-year yield, which is dealing at 3.05 currently, and S&P 500 fell by more than 2% to 4,018 yesterday. Now coming back on ECB monetary policy announcement, that actually ticked almost all the box of the market expectations, with Lagarde clearly sounding very hawkish. Benchmark European yield rallied to a new 8-year high, but the single currency, after another failed attempt to clear 1.08, fell hard to 1.06 level. Clearly, market was not doing euro any favors for its well-trenched hawkishness. On the contrary, investors seem to be looking at greater focus of chances that Europe might slip into stagflation, which clearly outweigh the narrowing yield differential between US to a 4-month low. What was also playing out against the euro was the blowout in the European peripheral bond yields. Italy is taking maximum pain. Something historically associated with the weaker euro, following warnings by ECB of increased fragmentation. Now let me try to explain fragmentation. This is a new tool which ECB is contemplating to control in borrowing cost for the Eurozone's most indebted countries as the central bank embarked on its rate hike to combat inflation. While investors hoped for support to these peripheral bonds via a new scheme, they were clearly disappointed as the concept was only discussed at the ECB meeting and there was no actual announcement. And after now this announcement, market will get more jittery because what central bank is looking to guide 19 different economies with one fit-all monetary policy. Let's see how it evolves. We will keep covering this concept in forthcoming sessions. Now, it was not only euro that got hit despite a expected rate hike announcement that it will be coming rate hikes in July and September. The other currencies like AUD also lost more than 1%, even though ACB hiked, Australian Central Bank hiked by 0.5%, much expected, higher than expected 0.25%. Here again, investors are looking at the Chinese economy slowdown, which has a direct impact on Australian economy. Dollar index was anyway gaining momentum and which got further pushed. The initial leg of momentum came from a USD JPY, which was anyway dealing at a 20-year high. We seem to be entering in a kind of a new period of dollar strength unless we see some kind of a shocking fall in the US retail inflation number tonight. The street expectations on US CPI is expected to print at 8.3%. In the current global environment, it's difficult to see how the stability in rupee can be continued. Asian currencies have started weakening again, triggered by the fresh rise in USD JPY into new 20-year high. The fear is that unhindered fall in yen is pushing the other regional economy to weakness in their currency. Are we entering into a new potential currency war? We will keep updating you on this as well. In such conditions, it is difficult to see how long the rupee will hold steady or the RBI keeps up their intervention. Today morning, Chinese currency is dealing 6.70 centric and Korean won is dealing at 1265 centric. We expect USD INR is likely to deal in the range of 77.65 and 77.90. Thank you. That's all from me.
Okay, that was quite wonderful for the end of a week. Pankaj, I really like the fact that 50 central banks were hawkish, and only two banks were having a different sort of an opinion after ECB turned its, understanding. Now it's only the Japanese bank which continues to be dovish, while the Chinese central bank continues to be a bit skittish on their actions. And I must say, ECB trying new approaches like fragmentation probably will bring in new tools in the market. Let's see how these fragmentation kind of an approach works with the economic crisis still going on in the European zone. Key thing to watch out for today is the US CPI for us folks. It can bring in some new fresh moves in the next week. Let's continue to watch how things go over the weekend as well. Geopolitics does not look to also calm down. We'll have an interesting week next week with the FOMC coming in as well. So we'll catch up again next week. Till then, we say goodbye. Thank you so much for joining.